Now, yesterday, US consumer prices out. It was a much waited for number, posting the biggest year-on-year increase in nearly 13 years, 5% in May year-on-year, following a 4.2% rise in the month of April. Now, you can look at this in two ways. You can either look at it on the euro-dollar chart, which I think yesterday was skewed by what happened on the ECB. So I think perhaps probably the best way to do this is to bring up a chart of what's happening for the dollar basket. And you can see in yesterday's session, this pullback in the dollar. We've got a continuation of that trade today, down below the 90 level today. Core CPI rose by 3.8%, higher than the 3.4% expected by economists. However, details of the report showed strong rises in airline ticket prices and used cars, raising doubts about underlying inflationary pressures. In other words, indicating potentially that it is only a transitory rise in inflation. US bond yields fell to 3-month lows, the dollar index followed, and this all sent gold higher. Well, let's pick up on that rise in the price of gold now and go over now to Daily FX and joining Daniela Sabin-Hathorn, who joins us there with a view of gold. And Dani, good morning to you. I know that we talk at this point about a risk event for next week, and I know this is the subject of your choice. What is the risk event you're attaching to in terms of gold?
Good morning, Jerry. I think it's undoubtedly that traders are going to be heading into next week focusing on the Federal Reserve meeting we have on Wednesday. As you were mentioning just now, the inflation data coming out yesterday, I think something has shifted in the last few weeks, and investors are now starting to believe Powell when he says that inflation is transitory and that his main concern is creating stable employment. Looking at the market reaction, as you were saying, we had a higher than expected inflation. Bond yields were kind of lacking activity. They were actually trending lower. We had the US 10-year yield at 1.4% yesterday, and just a month ago it was as high as 1.7%. So an interesting drop there. The US dollar was obviously trending lower, and equities finished the day higher. So a bit of a mixed feeling of a mixed reaction there from investors. So it seems to me that these concerns about inflationary pressures have dissipated to some extent. If we look at real long-term interest rates, and this is traditionally seen as, the 10-year Treasury yield minus headline inflation, this is as low as minus 3.6%. I mean, I think since the Fed started to become concerned about controlling inflation around the 1980s, we haven't seen a figure of real inflation as low as this. So it's definitely concerning as to see, inflation so high and how investors are suddenly so calm about it, obviously supported by Powell's words. So I think next week's meeting is going to be very interesting. The focus will be on whether the Fed talks about tapering. If they do, I believe it's going to be in the same line as the ECB yesterday, where they say that any changes to monetary policy will come in small doses over the next years. So this should serve to calm market jitters around rising prices even more. As I said, focusing on gold for me, very interesting. As we saw real yields falling and the US dollar falling, this was supportive for gold. If we look here at the daily chart, we've got gold, as you mentioned, around the 1,900 level. I think for me, I'd like to see it hold above this level in the next few days. Ideally, if we do see some sideways price consolidation, I would like it to be above this level. If not, we always have this trend line here. This is actually forming an ascending trend line here, the channel. So the lower bound is obviously going to act as support. I do think it is a strong level, so I do think we see support around here in the next week or so. For me, ideally, we want to see the gold trending higher. As long as this message about inflation being transitory and yields keeping stable, the US dollar keeping stable, I see gold heading higher in the short term. This area here, around 1916, this has been an interesting area in the past. We see this is the highest it was in the month of June. That's the highest it's been since January 2021, and it's also been interesting level around here in 2020. So if we see gold push above this level, then we've got a next level here. This is the 23.6% Fibonacci retracement from the highs we saw in August 2020. This is around 1927. Again, if we see the gold push above this level, we may see some strong resistance and some sideways consolidation. As I said, again, as long as it holds around the 1900 level, then I'm happy that it's going to continue to trend higher. And then we've got the ultimate test here, which will be the lower bound of the ascending channel. if we're able to get to this level, obviously 1950 is definitely going to be an area of resistance. Again, we've seen this area has been interesting in times in the past when gold has gotten as high to this. But for me, in the short term, we've definitely got gold trending higher, and just look out for these interesting resistance areas. It's likely that we will see a pullback, but as long as it falls within this support here and then bounces higher, I think the trend is going to be positive in the next few weeks.
Dani, thanks so much indeed. So with a look at gold there and a risk event for next week. Just picking up on the point that Dani was talking about how the Fed is likely to act. A poll from Reuters has just been announced of 100 economists saying the Federal Reserve is likely to announce a strategy for reducing bond buying program in August or September this year. Monthly purchase cuts wouldn't happen before early next year. Now, some of the economists expect the plan to be announced at the Jackson Hole Symposium, which is due in August this summer, and further details following the FOMC meeting in September. For more videos like these, follow us on Twitter and Instagram and subscribe to our YouTube channel.